Welcome back. Well, the markets are weak, but let's concentrate on what could be a potential important development for the Indian government and India as a whole. The Union government has initiated preliminary discussions with the Reserve Bank of India and SEBI for amending rules to allow the creation of a sovereign wealth fund. Sources say a $5 billion fund can create $10 billion worth investment opportunities every year. To talk more about this, we have Nilesh Shah, MD of Kotak Mahindra, AMC, and Deepak Shenoy, founder of Capital Mind, joining in as well. Nilesh as well as Deepak, welcome to the show. Well, Nilesh, we're going to start with you. It's in the works now. It's something which is possibly being considered. But are you a proponent of it? Do you think that India should have its own sovereign wealth fund? And what can it bring to the table?
Undoubtedly, yes. Time has come for India to establish a sovereign wealth fund. Obviously, it has to be done in a calibrated manner. We don't have earned FX reserve as we still run current account deficit. But notwithstanding that, we can do it in a measured manner. There are many examples of successful sovereign funds. On the Far East, there is GIC Temasek. In the Middle East, from Adia Adik to many other institutions. And in the Scandinavian countries, there are Norges and others. So we have many examples to learn from. In some of these institutions, people of Indian origin also works. And hence, we should be able to learn from the best in the world to manage our surpluses in a better manner. Undoubtedly, we have to do it in a calibrated manner and on the good work done by our managers till now.
Right. Good to hear your thoughts, Nilesh. Sovereign Wealth Fund is a good idea, but needs to be done in a calibrated manner. Deepak, welcome to the show and thanks a lot for joining in. Well, you believe it's not such a great idea? Give us your rationale.
So my apologies for having a different opinion here, but I think it is better that the government does not do this. It should not be sovereign. There are many reasons for that, Nigel. I think one of the problems that I see is that India has a relatively high cost of borrowing, and interest payments are more than 7 lakh crores per year currently, of which is nearly double our next biggest payment, which is for defense, right? So defense is about 3.5 lakh crores or a little more than that. And interest payments are 7 lakh crores. Sovereign wealth fund would essentially be, when the government does it, it will be through borrowing because of the cash accounting system that the government follows. It will have to borrow money and then invest that money abroad. And that borrowed money can be used to buy, say, dollars, and then those dollars can be used to invest abroad if you're planning to invest outside of India, which is what most sovereign wealth funds do. India already has a process where the government sets up grants and investing opportunities for startups and businesses inside India. That comes through SIDBI and a bunch of other institutions. So a sovereign wealth fund would largely be thinking of investing outside India, and I think that's not a good idea for the government to do. It is better perhaps to allow mutual funds, like Nilesh Bhai is running a very successful fund, and I think that those funds can actually use retail money to invest abroad in a controlled framework. They have been restricted by RBI to only $7 billion. That limit can be increased, and then we can actually have Indian wealth being used to invest abroad. It's just not that it's sovereign. It is not the government's wealth. It is people's wealth. People are putting their own money to it. Also, that doing such a thing would widen the fiscal deficit because of the structure of such borrowing, and then that would therefore increase the interest that the government will pay on future borrowing, and then that increases interest payments rather than reduce them. It would actually perhaps even be better to float India's currency completely, allow foreign holders to continue to hold the rupees and even perhaps use them in a floating format, which is what most developed countries allow their currencies to be floated. We don't allow it yet. We have a relatively controlled capital account convertibility. So I think doing that will actually allow our currency to be used perhaps tomorrow in bilateral trade and perhaps in trade across the world as well, which would actually get us more return for our investments, and we don't have to then convert to dollars and invest in dollars. We could perhaps invest in rupees outside India as well. Both the government could, but also the public in India can. I think that would be a better approach. I would say a sovereign wealth fund in the form of, say, Norway or ADIA or even Singapore, they rest on the back of relatively strong fiscal surpluses. So therefore, those companies don't have big fiscal deficit to deal with, which is why they are able to afford having a large, foreign investment fund run by the government. I think in India, because the situation is the opposite, while we may turn a current account surplus, our fiscal, I don't think will support it.
All right. Nilesh, would you like to come in on that? Because, Deepak has brought up legitimate points about the cost of borrowing, the high defense expenditure that we have, as well as the possibility that this could probably even widen the fiscal deficit. Do you think that India, on a macro standpoint, is ready to have a sovereign wealth fund?
So Deepak has raised some interesting point. And obviously, there can't be one right view or one wrong view. We are all living in a relative world. So when GIC and Temasek were established, were Singapore in a fiscally very sound position? Probably answer is no. But they nurtured companies like Singapore Airlines, like Singtel, like DBS Bank over a period of time. Today, Government of India is owning about 47 lakh crore worth of PSUs. There is also a substantial portion in unlisted. Today, it is managed under Deepak and other ministries. Can we float a sovereign wealth fund which manages this PSUs in a better manner on the lines of GIC and Temasek? So one day we'll have our own DBS Bank, Singtel, and Singapore Airlines from India. The second thing is, again, taking the same spirit forward, that since we are not fiscally surplus, we should not borrow money to invest. That's a very valid point. But today, we are taking money from foreign institutional investors, foreign direct investors, whose expectation of return from India is double-digit plus. And we are investing that money in US Treasury in low single-digit or at some point of time before at zero interest rates. We were running the most negative carry. Now, we are today one of the few countries where the net FX reserve is more than net FX debt. I'm taking NRI deposits out of FX debt as it mostly gets rolled over. So there is room available. And again, as I mentioned, we have to do it in a calibrated manner. If I put it in a very simple manner, till now we have played like our cricket team of the 60s, 70s, 80s. Our aim was to first draw the match, and then if there was an opportunity to go for a win. Today, Indian cricket team aims for a win, and if it fails, then probably aims for a draw. Our regulators have done a great job in ensuring that our macro fundamentals reach to current level. Their conservatism has worked very well for us, and it is time for experimentation on a small amount in a calibrated manner so that we can generate better return on our investment. Obviously, all the good things which we have done in terms of fiscal consolidation, in terms of lower current account deficit, that we don't have to give away.
Okay, fair enough. But Nilesh, just before we wrap up this conversation then, what do you think would be a comfortable size to start the sovereign wealth fund with? And what kind of investments do you think one should probably envisage if and when it happens?
So these are all, question of lot of details. I don't have access to all the data to give any suggestion on the same. But what Deepak Bhai mentioned, that this is a specialized subject and we should recruit professionals like GIC, Temasek, ADIA recruits professionals, pays them well to manage money in a professional manner. There will be ups and downs. If you invest in low risk, low return assets, volatility will be low. But if you go and invest in high risk, high return assets, volatility will be higher. We can't become like Swiss National Bank, which incurred a loss of more than $50 billion because they were invested into stocks like Apple and others. That's not our goal. But we have to take one gradual step in a very, very calibrated manner where we can go from lower risk and lower return to slightly higher risk and slightly higher return. And that job should be left to the professionals.
All right, Deepak, as well as Nilesh, thank you very much for joining in and sharing your thoughts at this juncture when it comes to the consideration of the government when it comes to sovereign wealth funds. I'm sure this conversation will continue as and when more details come up. Thank you very much for joining in and speaking with us. Well, we'll take a short break on that note, but a lot more on the markets and stocks once we're back. Stay tuned.